Next, we address timely issues in addressing the elephant. Is there an elephant in the room? Reflections on the evolving education sector. This conversation led by our very own Deborah Quazzo of GSV. We'll join in conversation with Pratik, Poddar, Nitin, Bhatia, and Pramath Sinha, exploring lessons learned from India's EdTech evolution.
All right, we're getting to the end, and it looks like this topic, come on Pratik, come on panelists, come on up here. Where's Pramath? Stop being so chatty, get on up here. We got things to talk about. We have to evaluate what's going on in the Indian EdTech sector. You may sit down. Thank you guys for being here. It's been a long 2 days. Great to have the crowd. This is a kind of fascinating and a topic, and one that has sort of come up 1,000 times, and I've played with it a little bit here. The panel topic, the panel name has evolved a couple of times to become, is there actually an elephant in the room at all? So I think that's what I want to hear. I have 3 extraordinary men here on the panel with me, and they represent a variety of views, which I think is fantastic. With Pratik, we have an investor with one of the top venture firms in all of India, early stage investor. With Pramath Sinha, we have a GSV advisor, one of the wisest men in education in India, but he's also been a founder not only of Ashoka and ISB and other institutions, but also Harappa. So he's been a founder both on the for-profit and not-for-profit side. And Nitin, a core advisor from DCA, a global firm that's actually been in EdTech as long as I have, which means that it's ancient, like I am. But anyway, over 25 years, DCA's founder and I have both been working in education technology. So I want to start with a little bit of framing as we think about, I've been sort of wandering the halls here, having conversations with the media. The media has been a very big player in all of this. I think there's some, discussion about whether that's been, completely constructive or not. But I think we can all soundly say that EdTech globally has experienced a highly volatile few years, from the pandemic highs to the post-pandemic market crash lows. And EdTech felt that more profoundly than most because they'd seen such highs during the pandemic. You saw venture funding and valuations topping the charts in 2021, over $18 billion raised globally, of which India had between $4 and $5 billion. And then it hit rock bottom last year in 2023 with valuations sliding off the map, although it's hard to actually know what a valuation is today, and just $4.4 billion of EdTech venture raised globally, of which well less than $1 billion was raised here in India. The only positive sign I can see right now, except whatever comes out of the mouths of these 3 guys, is that the attendance here at the ASU+GSV Emeritus Summit is off the charts. We have 200 more people here this year than we did last year. Last year we actually had to kind of beg people to come. So I hopefully that is a very positive sign of the fundamental interest in the sector and the importance of the sector, and that's a little bit of what I want to talk about. During all my conversations, I've heard the term elephant in the room about 100 times. So I actually want to try to figure out what that elephant really is. My intent today is not to dwell on the specifics quite exhaustively covered in the Indian media, but to leverage the wisdom of this panel. And we want to talk about the health of the EdTech market in India, the prospects long term, and what lessons founders and funders should take from the events of the last few years. So what I'd actually like to start with, which is a little bit different than kind of what I told you guys, is if you step back and think about the fundamentals of the education and the education innovation and the education technology markets, things that everybody's been talking on panels. Are the fundamentals intact? Has something dramatically changed? One by one, I'd like to hear from each of your perspectives what you think about that.
So Deborah, like you mentioned, the funding is definitely down, but that's a cyclical thing. And in my head, that is.
But what do you count fundamentals? What do you count as fundamentals?
So I actually think that the simplest questions were the smartest questions. And the simplest questions we were asking 7, 8 years back, 10 years back were, is this really changing the child's life? Is this truly creating an impact in whatever it matters to him? And if those questions were answered, the companies will thrive. So the fundamental questions were the smartest questions, but we all get into that loop where we end up believing in funding stories and valuation stories and so on. That's the mistake we need to avoid.
Pramath, you talked a little bit about this on the last panel, about what's been promised and what's been actually realized. So what do you think about the fundamentals of the I call it the pre-K to gray, education technology market?
Yeah, Deborah, I don't know if this is what you mean by fundamentals, but I think the core demand for high quality education in this country today
That's what I meant.
is unprecedented in human history. There's no question about that. When I used to work as a management consultant, we used to look at sort of what are the deep structural advantages or factors of a particular sector or industry, and I think these two gentlemen probably also do that today. I have never seen a more clear structural advantage, and very quickly, I think I keep saying this, so some of you may have heard me say this, 25 million children being born every year. Fundamentally, an economy that is on the rise, and even with that rise will not be able to cater to the entire 25 million. Forget in terms of jobs, but not in terms of education, aspirations. It's just phenomenal. I think the part where the fundamental starts to break down, according to me, and maybe I'm old-fashioned, and I see some old-fashioned people with me here. Rajendra Pawar from NIT is one. And I think what hasn't also changed is that students and parents want education to give them outcomes. That was always clear. I've made the transition from non-profit to for-profit, from in-person, brick and mortar, offline, to remote, recorded, online. I see students and parents want the same thing. In this country, parents largely foot the bill, so they want to be involved. They still want the same thing that they wanted 25 years ago. And we can't get away from that. So I think somewhere the EdTech founders and investors cannot change that fundamental, almost Maslow's type need that consumers in this particular industry have, unlike retail e-commerce or fashion commerce and so on. And I think we made the logical leap but forgot that that fundamental is very different for education.
But just to follow on, do you believe education technology solutions are the only way to achieve, sort of scaled delivery of this unprecedented demand?
Absolutely, because we can't build enough brick and mortar classrooms. Right. That old model of education will not meet the demand. We'll just, I'm no predictor of the future, but at least in all my experience, I feel that we cannot build enough classrooms and find enough teachers in our lifetimes. We are in India talking about 2047 as sort of a milestone, 100 years of our independence. Between 2024 and 2047, there is no way that we can build, that we can use the old bullock cart model, which, if I can use that analogy. We need the jet engine airplane equivalent. We need the wireless mobile phone. Look, we completely bypassed the wireline telecom industry in this country. We completely bypassed manufacturing in this country. We are going back to that. So we will have to leapfrog. Even the last mile student today has the aspirations to go to a top-notch institution.
Fantastic. Nitin, let me ask you, come at it a little bit differently. If in fact Pramath is correct, which I 1000% agree, and the fundamentals are unprecedented, actually, in terms of demand and need, and I think that's true in many other countries, but certainly India at the top of the line, then why is the education technology market so stuck, or would appear to be so moribund?
So I kind of work with a lot of these people, and a lot of these founders are my clients. But sometimes I see them building for investors and not for their customers, right? First and foremost, you need to build for your customers, and I think career outcomes should happen, and learning outcomes should happen, and good things will follow for investors, right? What you end up doing is you You are building for unit economics. You are building for growth next quarter and next year. And that's never a good idea, right? Like, first and foremost, I think you need to get your product right. You need to get your offering right. It needs to fulfill the brand promise that you have made to the customer. So I'll say, you know, I think that is one. Second, in India, you know, we are a razor-thin margin economy in most businesses, right? And therefore, you have to be aware of what is it that my customer will be willing to pay and will be able to afford and will feel that he has gotten an ROI out of it. Okay? A lot of times, I don't think, you know, we got that equation right. So we had situations where 80% of student base is kind of getting educated via financing. It's, you know, and that's happening because I need to add certain number of students this month, this quarter, this year, etc. Right? I think, you know, at some point in time that will break down. You know, you need to understand, and you have to work backwards. You have to understand what's a fair pricing that the market will support, and work backwards and say, how do I deliver what I set out to deliver while keeping the cost structure, you know, to be whatever it is, right? So I think, you know, we in some way got distracted from, you know, some core fundamentals as these two gentlemen have spoken about. That has led to kind of, you know, some of the challenges that we are seeing today, is my understanding.
So you got some new elephants, different ones.
So can I just quickly add?
Yeah,
I was on a flight this morning from Bangalore to Delhi, and there was this gentleman sitting next to me, young man, obviously involved in entrepreneurship. And I was not trying to eavesdrop or intrude, but I just happened to see the page he was reading. And it said in very large, bold letters, which were highlighted by him, that growth and market share have to come before profitability if you want to build a business. And I think that's the metric we ended up applying to EdTech as well. I think that holds true for many entrepreneurial ventures, software and other kinds of tech ventures, but here it doesn't work, I feel.
It worked when money was free.
Of course.
Yeah. So, Pratik, coming back to you on the investor side and dovetail, you know, leveraging off what these guys said. I mean, the reality is, yes, the market is tepid, to say the least, and I'd say, you know, generally, but and with the, you know, with the crash of the global private markets, and the fact that so many companies had raised so much money before that crash, during the boom, we really actually haven't been tested yet in terms of, certainly with EdTech companies, whether they haven't really come to market. They've been able to avoid coming to market for follow-on. So I just love to hear from you as an investor, is that when that onslaught of, and maybe they've all gone to profit, you know, I think many firms have learned the lesson and moved to profitability. I think that's one of the great positives. But when folks do begin to come to market, kind of getting at the elephants, do you think the ability to tap the markets will be stymied with concerns and preoccupations, but, you know, with things like the Bhatia story, or is it more fundamental to other issues?
See, I think for most, first of all, good part is that investors have shorter memories than most people realize. Cycles happen, people move on. Some people might move on, but the innovation cycle continues. So I'm not worried about I'm not worried about whether investors will look at the market positively or not eventually. Many companies would need to rethink their valuation. And that will be a challenge for a lot of founders, a lot of investors. But, you know, I sometimes think that last round valuation was a vanity metric anyways. The true metric one should be concerned about, that is the company worth more than the total money put in? If yes, then you have created some enterprise value and it's good. Last round valuation was someone gave some number to you. It's a useless metric in many ways. So companies' valuation will come down and it's okay. Like everyone should be happy with it. Yep. The only companies I would be worried about where the valuation is lesser than the total money raised, those have destructed value, and there will be bigger challenges. But most companies should be comfortable valuation are down 20%, 30%, 40%, it's okay.
So what you're really saying is you don't think the preoccupation in the media with the Baijiu story is is relevant to other. Do you think it's relevant to investors outside of India? Do you think it's?
I think some people will be afraid for some time, but there will be others who will take their place, and people will come. It has been only 9 years for me in the industry, but I was telling someone that there were two situations when I said the market is about to go dry and no money will come. And those investors, yes, went away, but someone else came in and took their place. So I think money is beautiful that way, that the flow continues, and people don't realize that the flow is.
Well, and I did remind, I mean, in 2021, the Chinese government sunk $400 billion of capital in the education technology sector with the stroke of a pen, and the market came back. What about you guys? Do you all believe that the issue, the preoccupation with the single story is going to ultimately have any impact on the ability of entrepreneurs to found things and companies to get funding and,
Well, so, is there a negative sentiment around EdTech? I'll say yes. So there is that hesitation on whether I'm going to get burnt, and I'll chalk it up to not just one company kind of going through bad patch. Actually, there are several other companies that have not actually delivered, what everyone had hoped for, right? So people are seeing that as a wider phenomena than one company kind of, not delivering, right? So I think, we have to recognize it for what it is. But at the same time, on ground, when we are kind of, going out in the market with a new business that we believe in and, we think, is a legitimate business that should be able to raise capital, it is being evaluated on its own merit. And I think, what I'm glad about is that the right kind of questions are being asked. So, people are asking a question on student outcomes. People are asking a question on unit economics. People are asking a question on real market opportunity, right? People are asking a question on, is this a sustainable pricing? People are asking a question on, do you have the right way to acquire customers? So look, I think, on ground, what we are seeing is people have learned from what has not worked, and people want to, give it another shot. And each company is being evaluated on its own merit. So I don't think it's closed for business by any stretch of imagination.
Do you have a comment on that?
No, these two gentlemen know much more about this. I want to just comment on two things, Deborah. I think the governance violations are far more serious. And there, I wonder what the investors were doing. I'm not casting any aspersion on any investor, but at least my investors in whatever I've done for profit, non-profit, would never allow me to do the kinds of things that were going on. I wouldn't allow that as an investor. I don't know what they were doing. It's just unbelievable, the kind of violations that have happened. So that's number one. And I hope that people will change as a result of what's happening. I think the second thing that I do worry about, and I haven't heard too much talk of that, is that we are somehow assuming that people in the high places and regulators and governments will not be watching this very carefully. I don't know if you know, but a set of regulations just came out on coaching.
Yep.
The first time in our country. I generally see people talk about NEP and how, GER numbers are evolving and so on. But I think what people are not seeing is a very strong tendency to work on fixing the quality issues in our country. I think with all this talk about India being great, and I think there is a sense that we need to intervene to get the quality right. So I think the governance, the quality issues at the front end with the consumers will attract attention and regulation.
Pratik, have you all modified anything you're doing at Nexus? Love to hear governance, transparency, shareholder rights. Yeah.
So I was about to add to Pramath's point on that aspect. See, first let's admit what is the real challenge. The real challenge is that there is an agency problem. As an early stage investor, it's important for me that the founder likes me. because this founder gives me deal flow, this founder helps me win deals, and the new deals I do, this founder provides ref check for me. It's actually a very obvious agency problem on why investors perhaps are not able to do their jobs, even if we want to do our jobs right. So this is a problem. Like, let's admit this. And
You need to be mean like me.
well, secure like you. Yeah, but yeah, you're right. It's a problem. So the investor needs to be so secure that he's willing to take those risks and be willing to say the right things to the founder at the right time. I think that is a bigger challenge. From a process perspective, I think a lot of us are doing this better now. Is that for the right stage of the company, CFO institutionalization, having a direct channel with the CFO from every firm's perspective on the side. All those things are important. Having audits at the right time are important. So all of us are hopefully doing our jobs better. But the principal agent problem still exists. And that needs to be solved in some other way.
With our last couple of minutes, I would like each of you to kind of go down the line and give your best advice to founders out there. We need to see more new companies. We need to see more innovation. Give your best advice out there to founders about how we drive this mission forward so that, in our words, all people have equal access to the future. You want to...
You want me to start?
Sure.
Yeah, okay. So look, again, I think, get down to the basics, deliver high quality education, and EdTech is first and foremost about education and later on about tech. Tech is eventually a channel or a mode of delivery. So deliver high quality education, figure out a way where, it stacks up for your customer, it stacks up for you. There's a decent ROI from a customer standpoint, there's a decent ROI from your standpoint, and rinse and repeat, right? The other thing, that people tend to do is they want to jump to every single potential market segment that there is, right? And especially in India, that is a more chronic problem. Everyone wants to dominate every single market segment without owning something, right? So I'll say best advice is go back to basics, do well for your customers, make sure there is enough ROI in that for you as well, and rinse and repeat.
Yeah, don't be in a hurry. Education, businesses, institutions take a long time to build. Find an investor that understands that. Don't sign up for quick exits.
Same, in a different way, listen to your heart more. Because all of us wanted to do the right thing when we started. But all of us lost our paths in some way.
Yes, we did. All right, with that, I want to thank you so much for this wonderful panel. Thanks, guys.
Thank you.